Hello and welcome once again to Globaleye's weekly review of the main business and economic stories making headlines globally. As ever, Simon Putt, our Senior Wealth Manager, joins me to discuss the main stories. Simon, let's start with US markets. 60 days into the Trump presidency, some doubts starting to creep in now as to whether he can get through his legislation.
If you look at the markets, those doubts are very much there. Since the election victory back in November, we've seen almost an untrammeled rise to new record highs for UK markets. Last week we saw that go in the other direction. On Tuesday, we saw US markets drop by over 1%, which actual fact was the first time in 109 days we'd seen that. Such has been the growth and the optimism that the markets have had. And really the concern that's emanating now is obviously around Trump and his effectiveness in putting forward his program. And obviously markets have risen on the view that there'll be a lot of financial and corporate sector deregulation, infrastructure investment, job creation. Well, you know, the omens aren't looking terribly encouraging according to the markets at the moment. He's obviously been rebuffed on the immigration bill and now with the healthcare. So there's some very serious doubt in the markets that he has a legitimate platform to put forward the very program which was stimulating the markets in the first place.
So when US markets open this week, do we expect to see some volatility?
I think we can expect it, although in the same breath I would say that markets didn't panic last week. We haven't seen a sharp drop. I think people are still giving the benefit of the doubt that there's a program there that is to be implemented, but clearly some playing around with the numbers. The Healthcare Act was clearly intended to free up some of the funds and the capital to finance the infrastructure program. We have to see what the message is going to be from the start of the week. But I suppose we take a modicum of encouragement from the fact that markets didn't just fall apart last week.
Now, across the pond, the UK, Wednesday, Theresa May triggers Article 50, talking about it, finally going to happen. Obviously, that's going to have an impact, I would imagine, on the currency markets and also on the stock markets. What's your view on that?
There will be an impact. What is that impact going to be? It's really hard to tell. I mean, a lot of people's gut instinct would be that the invocation of Article 50, a 2-year negotiation process for Britain to exit the European Union, a lot of people take the view that this is long-term negative for the UK and therefore consequently for the markets. In terms of immediate impact, well, I guess we could have seen something happening last week. You know, once the announcement is made that Article 50 is going to be called, market reaction was pretty flat to that. So I think people are just waiting to see what's going to unfold. We would expect the currency to stay weak, certainly around its level for the time being, which has been a supportive factor for example, the FTSE 100. There's nothing immediate yet that seems to suggest we'll move away from that. I think what we can look forward to, though, over the next 2 years, or however long the process takes to unfold, is just a very headline-driven market. So anything that comes out from negotiations that stimulates headlines, and whatever side of the political divide the media happen to sit on, it's going to create headlines that will move the market. Unpredictability is probably what we're looking at, a lot of uncertainty, and in the UK context it brings us back to a point that we've made in a number of these discussions, that investors really need to think about being diversified in their exposures to the UK.
Now, one of the consequences of a weak pound is pressure on inflation, and last week we saw inflation at 2.3%. Does this put pressure on the Bank of England to re-examine their interest rate policy?
You'd have to think so, and it was very interesting that 2.3% figure came out. I think it was the first time in around 6 years that the actual inflation recording has exceeded the Bank of England's stated target for the inflation rate. This creates speculation, as you can imagine, and there's now talk that the Bank of England will begin to embark upon a tightening of monetary policy from next year, which perhaps was slightly ahead of some people's expectations.
Finally, as ever, the oil price is always a concern, and we're seeing it Brent slightly above $50, but not at the 55 level that we were seeing a month or so ago. What do you think are the main reasons why we're seeing this drop in the price, in particular with in relation to the OPEC production limits?
Well, I think you have to look first of all the answer to that question to the US.
Right.
And with the increase in the oil price over the last few months, it's encouraged the shale producers to come back online. And I think one of the things that's changed from last year or 18 months ago, when shale was part of the problem for the collapse in the oil price, the shale producers seem to be managing their expenses and their costs a lot better. So it's actually proving cheaper for them to produce the oil. So if the oil price is around 50 or can go a little bit lower, it's not pricing them out of the market. So I don't think we're going too far away from this kind of $50 level. But I think on the counter side, you make the point about the OPEC cuts. The OPEC cuts haven't really bit yet. Now, obviously, on the positive side, we hear about 90%, in excess of 90% of the cuts that were stipulated have actually been implemented. Now, that's an encouraging thing. In terms of the impact upon the oil price, it's actually still a little too early to see that coming through. So I think we're going to see a little bit of a tug of war between the US shale producers bringing supply to the market, which obviously undercuts the oil price, to the actual OPEC cuts really beginning to have their impact. And we would expect the OPEC cuts to be extended in terms of the duration. So, long story short, it looks like they were around about this $50 area for a while yet.
So that is the new normal.
That looks like it, yeah.
Thank you once again.
My pleasure. Thank you, Tony.